Bull Bear Buzz podcast for decoding markets, fueling minds. Welcome to the deep dive. Today we're tackling a fresh set of announcements from Infosys.
That's right. We've got quite a stack here.
We do. We've got their audited financial results, full year 2025, Q4, both standalone and consolidated, NDA and IFRS standards.
And the whole set.
Plus their press releases on the financials, but also, interestingly, a joint venture update and an acquisition.
And the annexures, can't forget those for the details.
Never. So the goal today is really to sift through all this and figure out, what does it actually tell us about where Infosys is right now and maybe where they're headed?
Exactly. Our mission, if you will, is to kind of cut through the noise, pull out the key stuff, give you a clear picture of their performance, their big strategic plays, and, well, what it might all signify. Basically, your shortcut to understanding what matters here.
Okay, sounds good. So let's dive right in. The big picture first, FY25 financials, and maybe Q4 highlights. The top line numbers look, well, pretty decent.
They do. For the full fiscal year 25, total revenue hit $19,277 million. And what's quite telling is the growth in constant currency, 4.2%.
Right. Constant currency that takes out the exchange rate noise, doesn't it? Gives a cleaner view of actual business growth.
Precisely. Yeah, it removes the ups and downs from currency markets, so you see the core operational growth.
Makes sense.
And if you look just at Q4 of FY25, revenue was $4,730 million. That's 4.8% year-on-year growth in constant currency.
And even with the currency effects included.
Still solid, 3.6% growth on a reported basis, so good momentum there.
And it wasn't just revenue, right? Profitability looked better too.
That's right. Operating margin for the full year came in at 21.1%,
okay,
which is actually up 0.5%, 0.5% compared to the year before. So yeah, they're growing, but also getting a bit more efficient.
That efficiency point leads to something else that jumped out, the free cash flow. I heard it was a record. What does that really signal?
Oh, absolutely a record. They generated $4,088 million in free cash flow for FY25.
Wow.
And that's a huge leap, up 41.8% from the previous year.
41.8%. That's massive.
It really is. And that kind of cash generation isn't just a nice number on a page. It gives them serious financial firepower.
For what, though? Like acquisitions, shareholder returns?
Could be both. Flexibility for M&A, maybe bigger investments in new tech, or, potentially larger dividends or buybacks down the line. It signals a very strong financial footing. Lots of options.
Okay. And speaking of future business, what about the deal pipeline? Large deals look pretty strong, too.
Very strong. They booked large deals with a TCV total contract value of $11.6 billion for the year.
And TCV is the expected revenue over the life of the contract, right?
Exactly. And what's really key here is that 56% of that $11.6 billion was net new business.
So not just renewing existing stuff.
Right. They're bringing completely new clients, new work. That's crucial for showing sustainable growth, not just relying on the existing base.
Okay, good indicator. Let's get to the bottom line then, net profit. How did that shape up for the year and the quarter?
So for FY25, net profit after minority interests was 26,713 crore.
Okay.
And for Q4 specifically, 7,033 crore.
And earnings per share?
Basic EPS for the year was 64.50 and 16.98 for the quarter. Diluted EPS, which factors in things like stock options, was very close, 64.34 for the year, 16.94 for the quarter. Basically tells investors how much profit is behind each share.
And usually good profits mean something for shareholders. Dividends.
Yep. The board's recommended a final dividend of 22 per share.
Recommended. So it needs shareholder approval.
Correct. That'll be voted on at the AGM, the annual general meeting, on June 25th, 2025.
Got it. Any key dates for investors?
Yes. The record date is May 30th, 2025. You need to hold shares then to get it. And if it's approved, payment is scheduled for June 30th, 2025.
And wasn't there an interim dividend already?
There was. They already paid out 21 per share for FY25 earlier. So add this final one, and it's a pretty significant return to shareholders for the year.
Okay. So overall, the financials paint a pretty robust picture. Let's shift gears a bit. What about the strategic side? Business developments. That MHI investment in Japan caught my eye. Japan can be a tricky market.
It really can be. And this is interesting. Mitsubishi Heavy Industries, MHI, huge industrial group, they've invested in HIPUS.
HIPUS, that's the Infosys joint venture in Japan, right? Focused on procurement.
Exactly. Digital procurement transformation for Japanese companies. MHI took a 2% stake from Infosys.
Okay, so Infosys sold a small piece. What's the background on HIPUS? It's been around since 2019.
Yeah, set up in 2019. The goal was and is to help Japanese firms modernize their whole procurement chain, source to pay, using digital tools.
And MHI wasn't new to them.
No, actually, MHI was already a customer of HIPUS. So this investment feels like a doubling down on that relationship, a vote of confidence.
So what's the goal here? Why would MHI invest?
Well, the press release says MHI wants to use this to explore new business opportunities in the region. For Infosys, it's a great validation of their Japan strategy, building these local partnerships.
Makes sense. And when does this deal close?
Expected in Q1 of FY26, so the quarter ending June 30th, 2025.
Okay. Another strategic item was an acquisition MRE consulting. What's that about?
Right. So Infosys Singapore, which is a wholly owned subsidiary, is buying 100% of MRE Consulting Ltd. They're based in the U.S.
And their specialty.
Energy consulting. The deal's worth up to USD 36 million. That includes upfront cash and potential earnouts later.
Energy consulting. That feels very topical right now. What does MRE bring to Infosys?
Well, the docs don't go into super deep detail on MRE's specific services, but it clearly shows Infosys wants to bulk up its capabilities in the energy sector.
Right. With energy transition, sustainability, it's a hot area.
Exactly. Huge focus globally. This move could really position Infosys to grab more of that market as energy companies digitize and transform. Like the MHI deal, this one's also expected to close in Q1 FY26, and apparently no major regulatory hurdles.
Okay, so a JV stake sale, cementing a Japan partnership, and an acquisition boosting their energy consulting practice. What else?
Yeah.
The documents mention client collaborations, too. These always help make it more concrete, right?
Absolutely. They show what Infosys is actually doing day to day, like they're expanding work with Siemens AG using generative AI for digital learning.
Gen AI. So putting the buzzwords into practice.
Seems so. Shows they're integrating things like AI into real client solutions.
Any other examples that stood out? Different industries?
Yeah, quite a few. They're working with LKQ Europe on a cloud-based HR platform using Infosys Cobalt.
Cobalt. That's their cloud services suite.
That's the one. So showing cloud and HR transformation skills there. Then there's Lysenkrupp Nusra. They're helping them modernize their ERP systems to SAP S/4HANA.
Standard big upgrade project.
Right. But they're also bringing in Infosys Topaz, their AI platform, for that project too. So ERP plus AI in manufacturing.
Interesting mix.
Definitely. And they've partnered with a major North American airline to set up a dedicated global capability center, a GCC.
A GCC. Like an offshore innovation hub.
Pretty much, yeah. The goal is to speed up digital innovation specifically for the aviation sector. Shows a focus there.
Okay.
And lastly, they renewed a big multi-year digital transformation deal with Citizens. That relationship is 5 years old now.
So building those long-term partnerships too.
Exactly. Shows stickiness with major clients.
All right. Moving away from the business deals, there were also some, let's say, more procedural items. Board approvals, appointments.
Yes. The standard but important stuff. As we mentioned, the board formally approved all those audited financials, INDS, IFRS, Q4, full year ending March 31st, 2025.
Check.
And acting on the audit committee's recommendation, they approved appointing Makarand M. Joshi & Co. as the secretarial auditors.
Secretarial auditors.
Maybe.
They check compliance with company law. Right.
Correct. This is for a 5-year term starting FY 2025-26 up to FY 2029-30. But like the dividend, this also needs shareholder thumbs up at the AGM.
Got it. Now, those financial documents, always dense. Beyond the headlines, any other nuggets of information worth pulling out from the notes and annexures?
Oh, always. For instance, you get a much deeper revenue breakdown, not just geography, but by segment, financial services, manufacturing, high-tech, energy, utilities, resources, and services.
Help see where the money's really coming from.
Exactly. And interestingly, they noted no single client makes up more than 10% of revenue.
Which is good, right? Diversification. Less risk.
Definitely a positive sign for stability. Reduces reliance on any one big fish.
What about things like reserves on the balance sheet? Anything unusual there?
The details show the usual movements in retained earnings, share premium, etc., tied to profits and dividends. One specific thing in the standalone Indian financials was a transfer to a special economic zone reinvestment reserve.
SEZ. That's tax related.
Yeah, it relates to profits from their units in those special zones under Indian tax rules. Standard practice, but it's there in the details.
Okay, and employee stock options. Usually details on those.
Yep. The annexures lay out their ESOPs, the 2015 and 2019 plans. You see how many options were granted, exercised, still outstanding.
And the cost.
Yeah, details on exercise prices, the estimated fair value, and importantly, the compensation expense that hits their income statement because of these options. It's a key part of their compensation strategy.
Right. What about spending? Any big capital expenditure plans mentioned?
They did list contractual commitments for CapEx.
Yeah.
As of March 31st, 2025, the group had committed about 935 crore,
Mostly for.
primarily infrastructure, buildings, facilities, and computer equipment. It's actually up from 780 crore the previous year.
So continued investment in their own operations.
Looks like it.
Accounting policies. Usually a very dry section. Anything we need to know?
Yes, can be dry. The main thing is consistency. They state they apply policies consistently. They do mention upcoming changes to IFRS standards, like amendments to IFRS 9 and 7 and a new standard IFRS 18.
Any big impact expected?
Their initial assessment, they say, is that these aren't expected to have a material impact on the consolidated financials. So, watching brief, but probably no major shifts due to accounting rules soon.
Okay. And risk management. Crucial for a global player.
Absolutely. They outline their approach to the main financial risks: credit risk, customers not paying; liquidity risk, having enough cash; market risk, price changes; and of course, foreign exchange risk.
Big one for them, with so much revenue in dollars and euros.
Huge. They talk about how they assess potential losses, manage cash flow, and use derivatives like forward contracts and options to hedge against currency swings. Standard practice, but detailed in the notes.
What about potential future problems? Contingent liabilities.
Yeah.
Commitments.
Yes, they cover those. Contingent liabilities are potential obligations, things that might become a liability depending on future events. They mainly list claims against the company, mostly tax-related, that they aren't currently acknowledging as indefinite debts.
Okay. And commitments.
Those are firm obligations to spend money later. We already mentioned the CapEx commitments. They also list things like any uncalled capital for investments they've made.
Right. And finally, related parties. Always a focus for transparency.
Indeed. The notes detail transactions with subsidiaries and also with key management personnel directors, top execs, including their compensation. Standard disclosure, important for governance.
And it lists all the subsidiaries too.
Yes, provides a list and mentions any changes, mergers, liquidations, new ones formed, gives you the full picture of the group structure.
Okay. Wow, that was a lot to cover from those documents. Let's try and boil it down. What are the absolute key takeaways from this Infosys deep dive?
Okay, big picture. First, solid financial health in FY25.
Yeah.
You've got decent revenue growth, better margins, that record free cash flow, giving them options, and a strong deal pipeline with lots of new business. That's point one.
Strong fundamentals. Got it.
Second, clear strategic moves. The MHI investment deepens their Japan play, and the MRE acquisition is a deliberate push into energy consulting, targeted expansion.
Right, specific bets.
Third, they're still winning and keeping big clients across different industries, using tech like AI and cloud. Shows continued relevance. And finally, they're returning cash to shareholders via dividends.
So solid performance, strategic focus, client traction, and shareholder returns.
Pretty much sums it up.
So for everyone listening, hopefully this gives you a much clearer sort of consolidated view of what Infosys has been up to lately. You can see the drivers behind the numbers and get a sense of their strategic thinking in this, well, constantly shifting digital landscape. The financials, the investments, the client wins it all, builds a picture of their current position and maybe their future path.
Which leads us to, the final thought to chew on, considering everything we've discussed. How might this ramped up focus on energy consulting via MRE and the tighter Japan links through MHI, how might that shape their global strategy going forward?
Especially with digital transformation pressures and, frankly, the geopolitical shifts happening everywhere.
Exactly. And maybe another angle. What other questions does this raise for you about their investments in specific tech? Like AI, we saw the Siemens example. How deep does that go? What's the real bet there?
Interesting questions to ponder. Definitely gives us something to think about regarding Infosys' next steps.